So we'll be going live in another 5 seconds. One. Good evening, everyone, and welcome to the ANMI webinar number 108, the knowledge series. Today we have the CA, Mr. Vinayak Pai. Okay, we are going to talk about an overview on SEBI consultation paper on blocking of funds for trading in secondary market. If I have to introduce Mr. Vinayak Pai, I would like to say that he's a BCom FCA, director at Complisec Consulting Services Private Limited, a company specialized in compliance consultation to stockbroking and other capital market intermediaries. More than 2 decades of experience in security market compliances of various capital market intermediaries. For his qualification, he's a chartered accountant, postgraduate diploma in securities law from Government Law College, diploma in commodities market, diploma in cyber law from Asian School of Cyber Law, DISA from ICAI, system audit. Welcome, Mr. Pai, to our webinar. Over to you, sir.
Yeah. Thank you very much for your kind introduction. Hello, everyone, and welcome to today's session on a very important topic on consultation paper pertaining to ASBA in the securities market. Will you give me sharing rights?
It's already there for you, sir. You can share it.
Yeah. Is my screen visible?
Yes, sir, it is visible.
Yeah. Great. So, ASBA structure is currently applicable to primary market, wherein the IPO funds only gets blocked on application and gets debited only at the time of allotment. In the ASBA system, there is an authorization to block the application money in the bank account. While such block amount cannot be used for any other purpose, the investor continues to earn the interest on these funds for the period till the debit on the allotment. By extending this to secondary market, brokers would no longer be collecting the margins from the client, and it will be just blocked to a bank accounts of an investor. This may not matter much for 3-in-1 accounts, but would definitely matter a lot to other stockbrokers. So, as we have discussed, SEBI has issued a consultation paper to discuss the blocking of funds in the bank accounts of the client instead of transferring that to a trading account. It will allow the investor to earn some interest while trading in the secondary market. SEBI has proposed a UPI mandate service with an approval of RBI, whereby clients will be able to block funds in their bank account for trading in secondary market instead of transferring them upfront to the trading member. So this will definitely provide enhanced protection to a cash collateral of the client, which is similar to a pledge-like mechanism in the securities, wherein the securities are lying in the demat account of the investor and the pledge is marked in favor of client. The funds shall remain in the accounts of the client in this case, but it will be blocked in favor of clearing corporation till the expiry date of the block mandate or till block is released by the CC, whichever is earlier. CC can debit funds from a client account limited to the amount specified in the block. In the recent past, SEBI has issued a lot of regulatory framework, guidelines, and circular, which focuses mainly on individual client collateral segregation at the clearing corporation level. To begin with, in phase 1, SEBI has issued a circular on margin pledge and repledge mechanism, whereby securities are remaining in the investor's demat account and the pledge is marked in favor of trading member, and trading member can repledge it to clearing corporation. The advantage over here is CC has clear visibility at client level securities. In the phase 2, the collateral segregation reporting, which we are doing it on T+1 on or before 5 p.m. So wherein the members are required to disclose the amount of collateral received from the client, collateral which is retained with themselves, and collateral which is passed to a clearing member on a daily basis. In phase 3, collateral allocation. So from 13th of February, there will be a penalty on short reporting of allocation. So members are required to provide client-wise allocation of eligible cash and cash equivalent collateral placed with the CC at all time on a real-time basis. Then come the introduction of block mechanism. As per this mechanism, securities can be marked as a EPI block and the shares can lie in the investor demat account. If the sale transaction is not getting executed, the securities will remain in the investor demat account and will unfreeze at the end of T date. Just a minute. Sorry, I got a call. Sorry. So this is a introduction of block mechanism which SEBI has introduced. So the reason for review of current system. SEBI want to eradicate the risk associated with the reliance on reporting done by trading member, as member may report a wrong amount also. It's not that all the cash collateral is being placed with CC. Many a time brokers are keeping the cash collateral with them. So there is a possibility of misuse of cash collateral which is written by the member. Then risk associated with the wrongful withdrawal of client cash collateral by members from CC. And the main important risk is risk of non-settlement of payout by trading. The objective of the regulator in bringing this new move is to bring more transparency with respect to funds deployed by the client and gradually reduce the need to rely on reporting made by the stockbroker with respect to client's fund. Secondly, SEBI wants to eliminate the custody risk of client collateral, which is retained by the trading member. Third, the direct settlement with clearing corporation. Here, the settlement will be taken care by the clearing corporation. So it will lead to hassle-free and immediate return of client funds and securities, even if the member is in default, and there is an ease of porting of non-defaulting client to another member. So the end objective of this consultation paper is to ensure that the client is always protected from broker's default. So how this funds block process will work? Clients are required to block using the UPI app based on the blocking request initiated through stockbroker app. Various information such as TM code, CM code, UCC, segment needs to be captured by broker and sent to UPI. The block shall support the multiple debit. That is, for a block created on day one, it can partially be debited multiple times till that amount get exhausted or till the expiry or release of the block, whichever is earlier. The block will be created in favor of clearing corporation and it can be debited by CC only. So what are the intended positives from this consultation paper? The over here is the stockbroker will not be required to allocate any collateral for the clients availing the UPI block facility. Since in this case, the clearing corporation will maintain the collateral value of each and every client. This will significantly reduce the compliance cost for the stockbroker. The settlement will be carried out by clearing corporation directly with the client for the funds and securities, which may help to reduce the ongoing monitoring of exchanges. So going forward, if this gets implemented, we can expect a lesser on-site and off-site inspection, which will also help the stockbroker to reduce a lot of submission. Currently, we are doing weekly enhanced reporting on Wednesday, weekly cash and cash equivalent on Thursday, daily bank submission, daily holding submissions, daily segregation, daily allocation. So a lot of submissions are there. So positively, a lot of these submissions will go away if this consultation paper gets implemented. However, again, availing the UPI block facility shall be at the option of investor. Hence, this can be implemented in a phased manner whereby present-day settlement process as well as the block mechanism for funds will go in a parallel. So, how this settlement process will work? Let us look at paying first. There will be two rounds of paying. In the round one will be for UPI clients, wherein the settlement obligation will be calculated at client level for the clients opting for UPI block facility. No netting facility will be available across all the client opting for UPI facility. The settlement obligation shall be inclusive of standard statutory levies such as STT and stamp duty. The first deadline for paying will be for UPI client. For the client with payable funds needs to provide a UPI block, and for deliverable securities, our current EPI block mechanism will be applicable. In case the clients have not provision for their paying, it will be considered as short. The round two will be for a single net settlement obligation at a clearing member level for the proprietary account of clearing member and trading member, the client who has not opted for UPI facility, and the shortage from UPI clients in round one will be settled in round two. So any shortage or any default of clients with respect to paying of funds will be added in the round two. We will see this in the illustration, which will be there in our later slides. So now let us look at payout. The payout will be done in a single round for client who have fulfilled their paying obligation. The clearing corporation will give payout of funds and securities directly in the bank and demat accounts of the client opting for UPI block facility. For all other client and proprietary account of clearing member and trading member, there will be a single net settlement by CC. Now let us look at various scenarios pertaining to dealing with shortage. With respect to cash market fund shortage, payout will be deposited in the client's demat account, and CC will direct the depository to mark an auto pledge to TM unpaid securities pledge account, that is TMCSPA account. As we are aware, the KUSA will be discontinued in near future, and anyways, you need to transfer the shares to client demat account wherein you can mark in auto pledge. In case the clients are opting for UPI block facility, this direction will be carried out by clearing corporation. In case of security shortage, payout won't be provided to the client. The amount will be withheld by clearing corporation and it will be used towards the requirements of fund in lieu of securities which is delivered short. Now let us look at how we are going to deal with shortfall pertaining to derivative segment. CC will debit the block to the extent of paying requirement, irrespective of whether such debit causes the margin shortfall. In case of margin shortfall, clearing member can square off the position and the profit and loss will be fall on the client. So client is responsible for profit and loss in case of such square off. However, till the time clearing member close out the position, provisions related to deemed allocation of proprietary collateral will apply. Let us study the illustration for a further clarity. In the scenario 1, there is a normal paying payout reflected where there are no defaults by anyone. In the first round of paying, the UPI client paying will be settled individually, whereas in round 2, if there is any paying obligation at SCM level, it would be settled. However, in this illustration, it's a payout at SCM level. So after 2 rounds of paying, the payout round will be executed, wherein the UPI client will be released the payout at the individual level. You can observe for the client 2, CC will give a payout of rupees 300. and at the SCM level, club payout for all non-UPI client and proprietary would be released. So this illustration is self-explanatory. The illustration has been given in a SEBI consultation paper. The same is being reproduced for a better discussion. Now let us look at scenario 2, where the client 1 defaults for the paying amount. Correct? There is a client 1 who is defaulting for his paying amount of rupees 300 in the first round of paying, except for UPI defaulting client, or other paying will be settled individually. Whereas in round 2, the UPI defaulting client amount is being adjusted with the SCM obligation. So earlier the SCM obligation, you can observe 250 payout was there, but since this 300 paying short of client 1 is being adjusted, the payout is getting knocked off and the same is getting converted to paying amount of rupees 50. So post that, payout process remains the same. Client 2 will get the payout of rupees 300 since he's in UPI block. And for non-UPI clients, there is no payout over here. It's a combined paying, so which will be taken care in round 2. In the third scenario, there is a default at the client 1 as well as at SCM level. The default is for the paying amount of rupees 300. The SCM level is also having the net paying obligation of rupees 150. In the first round of paying, except for the UPI defaulting client, all other paying will be settled individually. Whereas in round 2, the UPI defaulting client amount is being added to SCM obligation. So SCM obligation is getting increased to rupees 450. This is due to default of client 1. SCM provides rupees 200 from paying received from client 4 and defaults on balance amount of rupees 250. Here, the client 5 is not under a UPI block mechanism. He faces a risk due to default of fellow client, that is client 1. So risk of rupees 50 is client 5 is facing. SEBI has invited the comments on the proposal. SEBI has provided the questionnaire also, so that we all can give our opinion and feedback latest by 16th of February. We all know SEBI issues the consultation paper from time to time. We need to give our input. Since as a stockbroker, here we are going to significantly affected party, so we must give our inputs. If we don't give our inputs, then in future, we cannot complain that this is not proper. अरे ये तो पॉसिबल नहीं था, ब्रोकरेज का सेटलमेंट कैसे होगा, ब्रोकरेज सेटलमेंट के वजह से हम ब्रोकर को क्या सिक्योरिटी है. See, you have lot of concerns. So this is an opportunity for us. So please give your comments to SEBI so that SEBI will definitely consider your comments, and this will be helpful for us because being a market participant, आप लोगों को सब कुछ पता है कि practically क्या difficulties आएंगे, क्या better रहेगा. So you can always give your inputs to SEBI. SEBI basically wants to know, is this the welcome move by SEBI towards the safety of clients' asset? Are there any kind of operational challenges? Any risk is going to be increased? Should this be a mandatory or voluntary for all brokers or investor? What would be the methodology to settle the brokerage? Will it be a direct settlement with the client outside UPI framework or CC to collect the standard rate of brokerage and pass on to trading member? Here the rate will be a standard across all the clients. So this comments needs to be, you need to give your inputs on this, which you can provide preferably by email. The email IDs have been mentioned on the SEBI consultation paper also, or it can be given by post to a SEBI. Again, do share your views and comments to SEBI by 16 February 2023. Thank you, and we will take the questions now one by one. Thank you.
Thank you very much, sir, for this wonderful presentation you've done. And I'm sure the people who have attended the webinar has got enough knowledge about this particular topic. So we have a few questions lined up.
Correct.
I'll just narrate it one by one. The
Sure.
first one we have is how manage settlement day margin for cash till the pay in of stock, exchange showing margin till 11:30 a.m. How also allow CFS for delivery sell, repledge benefits should be live and required live repo for stock, accepted or note for limit.
Is this question pertaining to allocation or is this question pertaining to the consultation paper?
I understand this is for the consultation part, sir.
Okay.
So I understand like they wanted to know like the repledge benefit should be live and required live report for stock accepted or note for limit, not accepted or note for limit.
Repledge benefit now also it is live only. In case of NSE in NMAS and in case of BSC, I think not sure BSC the RTRMS. We can view the limit live. Repledge benefit is given live, I believe.
Right, sir.
In NMAS, we get the benefit to see.
The second question which we have over here is many brokers and CMs pass on the interest earned on FDs to the clients. Does the investor client not stand to lose this income? How does CC propose to share this income or compensate clients for the same?
CC is going to do the daily settlement. So amount will lie in the bank accounts of the client and client needs to block in favor of clearing corporation. So here client is going to earn the interest for whatever amount is there in his bank account, though he cannot use. So even though the brokers earlier used to provide the interest to the client, few brokers, not all brokers, few brokers used to provide the interest to client. Now CC is definitely going to make a daily settlement. So this will take care of that.
Right, sir. The third question which we have is, what is a resource for a CSM if an UPI client default in fulfilling its obligation in F&O?
You can definitely sell the collaterals, which is pledged in your favor.
Okay. The next one we have is the period of block-in F&O segment.
See, block will be, as we have mentioned earlier, the block, so definitely client investor needs to decide. So till the expiry of that block or release of block, whichever is earlier. So that will be the period. So they have not bifurcated between cash and F&O. So ideally it should be same.
Okay. The next one we have is whether block of funds for margin obligations shall be as per the margin rates prescribed by exchange, or TM CSM can initiate a block for a higher amount of margin as per its RMS policy.
Very good and valid point. I think this can be a part of the feedback which we are going to send it to SEBI. Ideally, currently, we can definitely prescribe the higher rate. So going forward, if this consultation paper gets implemented, so what would be the rate of margin if the broker, due to some event, wants to levy the higher margin? So how can they do it? So it's a very good question. So this can be a part of our feedback which we are going to send to SEBI. You are in mute, sir. You are in mute.
Sorry, sir. Sorry, sir. We have a question on from one of our viewers right now on YouTube. What he wants to know is, does blocking of funds through UPI includes margin and pay-in obligations of clients? I've sent the question in the chat.
Does blocking of fund through UPI includes margin and pay-in obligation of client? Yes, definitely. It initial to begin with, you can block to the extent of margin, but at the time of paying, you need to provide, investor needs to provide an additional block.
Okay. We have another question that asks for how to measure MTU M to M risk in case client is in loss from futures or option position. This I understand is on the sixth question of yours.
Yes,
that is
it's the sixth
how
question.
to measure.
How to measure mark-to-market risk in case client is in loss from futures and options position. RMS, I think we are only going to monitor, not sure though, because CC is definitely going to provide the block, but the rest RMS as a broker, we are only going to monitor. So mark to market loss and profit, definitely we will understand. Real-time basis, our RMS will definitely function. So this is what actually I feel.
Just keep an eye on that.
This is what actually I feel.
Right, sir. The next one which we have is, will this mean discount broking is not a viable business model anymore? It is the topic.
Very difficult for me to answer. But yes, going forward, the FD interest which the discount broking used to earn earlier, definitely not sure, means going forward how it will be viable. But very difficult for me to answer this question, sir.
Right, sir. We have, that's the end of the questions which we have received by now. And maybe you some inputs which you would like to give to our viewers.
I think everyone needs to contribute towards the giving the comments, which is very, very important. Because till the time we are not able to give the comments, then it won't be possible for regulator to understand the difficulty. It's not that the regulator cannot issue the circular directly. They are issuing the consultation papers so that whoever is significantly affected parties, they can give their comments, they can give the views. So any public can give the views. See, what happens is that normally we say circular issue होने के बाद, अरे यार ये possible नहीं है, ये होना नहीं चाहिए था. So whatever is there, if we can show our concerns to regulators, it will definitely help us.
Right, so well answered, sir. Now we have another question again from a viewer on the YouTube. He wants to know, how does trading limits will be allowed to clients under UP mechanism?
CC will provide the deposit which is available with them in the form of funds block as well as in the form of securities block. So based on that, we can give the trading limits to the clients. This is what actually, just a minute. Huh? Because 5.9.2 says that as a stockbroker, we need to offer trading facility based on blocking of fund to their client. Stockbroker shall be required to develop the necessary interface required to initiate the blocking request in UPI on their app and shall ensure the seamless transfer of investor information to CC, like their UCC and everything. Then develop the interface with CC to capture the block information. So as a stockbroker, we need to develop an interface with CC, which will help us to capture the block information. So 5.9.2 C will answer your question. And for replace securities, existing mechanism will work. SecPlace file, we are getting it from NCL and HS file from ICCL.
Great, sir. I understand that all the questions which you have been asked by our viewers, they're all well answered by you, and I'm sure
Thank you.
That they have no more queries to ask about. Still, as you have shared your details with them, they can get back to you on this.
Sure.
We thank all the viewers who have attended this webinar of ours. And thank you so much, Mr. Vinayak Pai, for being with us on this webinar. And your details, what you have explained in the presentation, was really very much edible to all our members.
Thanks, ANMI, for giving me an opportunity to present the webinar on this very important topic. Thanks. Thank you very much.
This is a pleasure, sir. And thank you so much once again for being with us on this webinar. Thank you once again, sir. Have a
Thank
wonderful
you.
day.
Thank you.
Thank you, everybody.
Bye-bye.